If you have ever asked yourself, how do I invest in stocks? This video will finally give you the answer you've been looking for. We are breaking down everything, what stock really are, how to actually start, which fund to choose, the mistakes that can destroy your money, and how to build the real wealth without gambling. Even if you're starting with just 1000 rupees, you will know exactly what to do by the end of this video. Let me ask you something that might sting a little. If investing in stocks can genuinely grow your wealth faster than any bank account, why are you still hesitating? I know why, because the stock market feels like this is unpredictable monster full of confusing numbers, scary charts, and that paralyzing fear of losing everything. But here's the shocking truth. While your saving account is giving just 3.5%, inflation is quietly eating 6% every year. Picture this, you and your best friend both save 10 lakhs, you keep yours in bank, 10 years later, it buys what 5.5 lakhs buys today. But your friend just invests in a simple index fund. Now it's 31 lakhs. You both worked equally hard, but only one understood how money actually grows. This video will shift you from the world where money slowly dies to the world where money actually grows. Now, this is important. Your money is either sitting in a broken elevator that barely moves or riding a steady escalator that keeps going up. The elevator gets stuck, jerks around, and maybe barely moves inches forward. That's your savings account, giving you the illusion of safety while inflation eats your wealth. And the escalator, it has its ups and downs but keeps moving upwards. That's the stock market. You don't need to run on it, you don't need to time it, you just need to step on and stay on long enough to reach the top. By the way, I'm Nikhil. I'm a chartered accountant by profession with nearly 2 decades of experience with EY, PwC, and one of India's top wealth management firm before launching my own startup. And this is FinNiki, where I simplify money the same way I practice it. So what are stocks? When most people hear stocks, they immediately picture the Wolf of Wall Street. Complicated charts, people screaming buy, sell. But let me tell you something, what a stock actually is. A stock is ownership, pure and simple. When you buy one share of IRCTC, Zomato, or Tata, you become a tiny co-owner of that actual business. Every time someone books a train ticket, orders food, or drinks that morning chai, you own a microscopic piece of that transaction. And here's how you make actual money. Capital gains. This is your stock price growing. You bought Infosys say at 500, now it's say 1500. That's 1000 difference. That's actually a profit sitting right there. Dividends. Companies like ITC and Coal India literally send you money every quarter. It's passive income for doing absolutely nothing except owning a part of the shares. You're not gambling, you're not speculating, you're becoming a partner in India's biggest success stories. Before you jump in, you need to understand this one decision that confuses every beginner: active fund versus passive funds. Active funds. Think of these like hiring a professional chef. Fund managers at various fund houses like Parag Parekh, Axis, or SBI or HDFC constantly are researching, picking stocks, trying to beat the market. They charge higher fees, which is called as expense ratio, because someone's actively managing your money. Passive funds, these are like following a recipe book. Index funds simply copy the Nifty 50 or Sensex exactly. ETFs do the same but trade like a regular stock. Much lower fees because no one's making decision, it's all automatic. Which is better? If you want simple, reliable, hands-off growth, go passive. If you believe experts can pick winners and you're okay paying for it, go active. Most successful investors, they actually use both: a strong foundation of passive funds with some active funds for extra potential or alpha. By the way, if you're finding this useful, just hit the like button and subscribe. It's a small thing, but it really helps me know that you're actually enjoying this kind of content and keeps me motivated to make more for you. So, how to start investing? Let's get practical. Here's exactly how you can start. Step 1, open your gateway. You need a Demat account, your digital locker for shares. And trading account, your buying and selling platform. Zerodha, Grow, Angel One, Upstock, there are many such platforms, all work great. It takes just 10 minutes online. If you can order food online, you can do this too. Step 2, decide your approach. Love researching companies, go for direct stocks. Want something stress-free? Choose index funds or ETFs. There's no wrong answer, just what fits your requirement. Step 3, start with what you know. Your first investment should be very familiar. You shop at DMart, research DMart. You're ordering from Zomato daily, understand their business model. Familiarity removes fear and builds confidence. Step 4, automate with SIPs. Even 2000 to 5000, even 10,000 monthly is extremely powerful. Here's the magic: rupee cost averaging. When markets fall, you're automatically buying more units cheap, but when they rise, you are buying fewer expensive ones. No timing stress, no emotional decisions, just systematic wealth building. Now that you understand how to start investing, let's also understand the three types of stock. Every stock falls into these three buckets. Large cap, the giants, Reliance, Infosys, HDFC and others, very stable, perfect for beginners. They won't double overnight, but they won't disappear either. Mid cap, the rising stars, IRCTC, Vari Renewables, PVR, Inox, many such companies. They are growing fast, moderate risk, higher return potential than large caps. Small cap, they are the wild cards. They can explode upwards or crash completely. High risk with high potential reward. A smart beginner's portfolio, 70% at least in large cap and mid caps for stability and 30% in small caps for growth opportunity. Now let's forget these complicated formulas and here's what actually works. Start early. Compounding interest is everything. 5,000 monthly from age 25 grows to over 2 crores by 55 at 12% returns. Every year you delay, it will cost you lakhs. Time is literally money. Of course, the actual purchasing power could be lower because of inflation, but stepping up the investments as your income increases every year becomes much more important to overcome this issue. Be consistent, especially when market falls. When everyone panics and sells, that's when the fortunes are built. Market dips aren't disaster, they are opportunities to accumulate more at lower prices. Diversify. Don't put everything into one basket, spread it across IT, banking, FMCG, energy, pharma. When one sector struggles, others balance it out. It's your protection against major losses. Review yearly, not daily. Think of your portfolio like a garden. Once a year, trim what's grown too big, nurture what needs help. Constant feeding kills return. Now let's learn from others and avoid those mistakes that destroy beginners. The hot tip disaster. By the time that guaranteed stock tip reaches your WhatsApp, smart money has already exited it. Think of it, if it was that sure, why would anyone share it? The daily price checking addiction. If you own a home, you don't check your home's value daily. So why check stocks? Daily movements are noise. Wealth builds over years and not days. The penny stock trap. Those 5 rupees, 10 rupees stocks that promise to become 100, 9 out of 10 never recover. It's lottery ticket disguised as investing. The tax surprise. Sell within a year, 20% short-term capital gains tax hits you. Hold over a year, 12.5% on profits above 1.25 lakhs is taxed. This knowledge alone saves thousands. See, what's important to understand is that market evolve constantly. It's important to read various books like The Intelligent Investor, One Up on the Wall Street, follow SEBI registered advisors. Knowledge compounds just like your money. So now you see how straightforward this actually is. You don't need a finance degree. You don't need lakhs to start. You just need to begin and stay consistent. That's more important. I've shown you everything. How 10 lakhs becomes actually 31 lakhs instead of losing value to inflation. How to open accounts in 10 minutes. How to start with just 2,000 monthly and what mistakes will burn your money. This is a boring strategy, but this is the one which actually builds wealth. The only thing that's separating you from investors building wealth right now? Taking action. Tonight, open the Demat account. Tomorrow, buy your first index fund or an ETF. Start that SIP because every day you wait, inflation is stealing your money while others are multiplying their wealth. Drop your investment doubts below. I'll reply personally to every single one. That's it from me. I'm Nikhil Verghese. Share this video with that friend who's been planning to invest for the last 2 years. Subscribe below to make your finances less tricky with FinNiki. See, the question isn't about whether you should invest, it's whether you'll start today or actually you'll lose another year.